I just need some help on understanding is 1.35, even though that's the number that he wants and I could do that. Should I just go for it, or should I still try and haggle the price a little bit? I think I'm just too much in the numbers right now. I'm just analyzing it too much, just because it's my first deal, I'm trying to get every dollar out of it. And I just feel like, a part of this meeting was, from your experience, is it worth it to do that? Is it worth it to just maybe pull the trigger or still get a couple of dollars out of the deal?
Should you just jump into this, or should you nickel and dime? I think either way, you'll walk away with a lesson. I think the bigger thing is knowing what your big picture is, how this fits into it. And then as long as you're comfortable, then just do whatever you prefer.
I think I want to make a call after this and pull the trigger.
What is up, YouTube? Matt McKeever here. In today's episode, Deal Destruction, we sit down and chat with Sonny, who's looking at buying what looks like, at least on the surface, is a very expensive duplex just outside of St. Catharines, Brock University in Thorold, and really excited to dive deep into this unique 12-bedroom duplex that's very oriented towards student rentals. So we're going to be jumping in with Sonny.
So a little bit about myself, obviously. I actually got into real estate and investing back in 2013. I went to York University first year out of high school, right after high school. Didn't really like it there, took sciences, decided to go to Brock instead for their business program. And from York to Brock, it's a whole different world out there. Like back then in 2013, there was literally nothing. The school was really small. And so I started connecting with people that were a little bit like-minded. And a really good friend of mine had his own car, paid his own bills, he was kind of living that lifestyle that I was like, are you on OSAP or what are you doing? All right. I started living with him, and he told me that the property that he lived in, he actually managed and he owned. So his mother had bought it. He lived in the room up front. He'd rented, the upstairs to other people. And he's a student, so he needed a room, but he was essentially house hacking in a sense. So I stayed with him for a little while, understood how the bills worked, things worked in the area, and he connected me with a developer who had built a 17-bedroom triplex right next door to his property. And honestly, I just called my parents. I was like, hey, I can help you guys manage you guys' properties. At that time, my mom was just laid off from her job. And I was like, I know you guys got a bit of savings. I'll pay for school, I'll live for free, and we'll make a pretty penny on the side. Let me just figure it out. So they jumped in it with me, thankfully. Let me share my screen so I can kind of show you what that property looked like. Could you see my screen?
It's just coming up. Yep.
Okay, awesome. So this was the house that we had lived in where my buddy lived. This was his room right here. And this is a 17-bedroom triplex in St. Catharines. Okay. So this is in the Thorold area. So we had 6 bedrooms, and then 5 because of the furnace area. So we had purchased this in 2013. I had self-managed the property, got really good at it. Basically, being a student, I knew how to talk to the students and conversate with them. A couple of them were my buddies, but I try to keep the most professional relationship with them. And soon after, my parents, they started understanding that, hey, this is a good situation. And then we had actually purchased another property right here on Queen Street. Let me just circle around. There you go. So we bought this in 2015. This is an 8-bedroom, 8-bathroom semi-detached duplex. So gotcha. 8-bedroom, 8-bathroom on this side, 4 and 4, and then 4 and 4. So my parents had bought this, I believe, in 2015. I, worked with them on this one, and I started managing this property as well. Soon after, there was a new development in St. Catharines and Brock area, and we had purchased a smaller unit. This is a 6-bedroom. Let's see if I can find it here. Oh, perfect. Just went by it. 6-bedroom, semi-detached, right there on this side. It was it was like a regular home. We had built up the basement, 2 bedrooms, and a really good thing about this builder for the properties I had purchased was the finishes. Like the finishes were amazing. We had pot lights. We had, really here. I'll show you some interior shots of some of the properties, and the design language is pretty much the same. So it's pretty much gray, nice floors, big open unit area. Nice bathroom. So there's a bathroom for every student, which is great, especially now during COVID times.
Nice,
Like everyone kind of wants their own space. And the room sizes are really good too. So the unit that I'm interested in having a conversation about today is on Queen Street as well. Same developer. He has just built this out. Those are his as well too. So he's been doing a good thing for a little while. Yeah, he's a busy guy. This is the property right here.
Okay.
So this is a 12-bedroom, 12-bathroom duplex. I think I could probably show you some interior shots. I got the design work right here. It's pretty much split pretty evenly. So you'll see when you walk in, you get the living and kitchen area, and then the bedrooms are split 3 and 3. So you got 6 bathrooms, 6 bedrooms. Right now it's currently rented at above market rent. He's gotten a lot of interest from international students because the property is so nice and all that. So I've talked to the seller. He wants to do a private deal on this property, but I think he has the bug of the hot market right now, and he wants to evaluate this on cap rates. But then when that doesn't really justify it, he wants to just value it on future value, etc. So he's thrown a number at me. Let me show you. Do you have any questions actually before?
No, this has been pretty thorough. So love it. Obviously you're very familiar with this market. So oftentimes I would grill people about the legality of the properties they're getting into, but these are all new builds. I'm assuming they've been built to code and with the city's permission. And again, sounds like it. So let's jump into the numbers. Yeah,
so the thing about Thorold, actually, we have rental licensing. So these have all been licensed and obviously beyond code, so they're all good.
Yeah.
That's why I want to jump into this property. I'm pretty interested in it. I guess the reason why we stopped buying properties, I guess the last property we had bought was in 2016. I graduated in 2017. Started working for an IT firm, and then got employed by an IT firm out in the States. So for the past 2-ish years, we bought a bigger principal residence for me and my family, and then I've saved a bunch of money now. So I've gotten a really good job, and I'll be honest with you, I don't know, who else needs to hear this, but having a good job and having freedom are two different things, I would say. So even if you're getting paid, to a lot of people, a lot of money, just that freedom of like owning something and having the freedom of time, being able to be your own boss and do these other kind of things is pretty much invaluable, I think, at this point. And I want to start doing something that I know works. I've seen how much it's worked for my parents. So I want to jump into it on my own. I want to keep my job as well too, but since I know this market, I thought it'd be a little bit less time intensive, and I can get my foot in the door, and then eventually, as we build up, and I watch your videos, so as you build up, you kind of get to that breaking point, and that's when you quit your job and move on, right? All right, so the asking price for this property is 1.35. The monthly rent is $650 a bedroom for 12 bedrooms, which gives me about $93,600 gross. The market value difference is, so one of my other properties is its own bedroom and bathroom. We list that for $585, which is how I got the market value rent here. But these rooms are quite bigger. I don't know if you guys could see in the drawings there, but they're about like 12 by 17. They're pretty big, massive rooms. So he's been able to rent it out for 2 years now at $650. Sorry. Expenses, I've been able to talk to the city and see his records for the past year. $10,500 for taxes. Taxes are crazy in Thorold area, Niagara. Insurance about $3,000. Typically for vacancy and for repairs and maintenance, I put 5 and 5. But he signed new lease agreements starting May 1st for this year moving forward. So I think vacancy would be a little bit, I reduced it a little bit. And then repairs and maintenance, since it's such a new build, I kind of put that at 3% as well. Based on us purchasing his units before, this is kind of usually the average it's been for a little while. So this is kind of what I left it at. And then management is 5%. I'd be self-managing right now. I manage my other properties for my parents as well too. So this would be just another one in my portfolio at that point.
Gotcha.
For student rentals, the biggest and the most variable expense I would say would be utilities. Last year he averaged about 9,500, so that's what I used here. So my total operating expenses would be 33,000, leaving me about 60 grand, about the expense ratio of 36%. I've been looking at the cap rates if he wanted to go that way, which is kind of what he's positioned it at. I've seen properties in the 5 to 5.25 range, but those really haven't been occupied, or a couple are vacant right now. So this is why I have this chart here just for my own reference. But based on what he's asking, in his eyes, it'd be a 4.46, 4.5% cap rate. And so the asking price, if you notice on the right-hand side here, I kind of have two asking prices here. So a little background, I had a conversation with him last week. I started at 1.2, he started at 1.5, and then he got to 1.35, I got to 1.25, and it had been like 2 hours, and he's like, hey, let's just call it a break right now, but let's talk back in about a week, because that's when he was signing the new lease agreements and stuff. He was getting a little busy. So based on his purchase price at 1.35, I'd be looking at a down payment of 270, closing costs of $2,600. I've already been pre-approved for 1.8% for the 1.35, but I know you like to use 3.5% sometimes, just so looking at that number, if I self-manage, I'm looking at about 12 grand. If I don't self-manage, I'm barely breaking even here, about 2 grand. But I kept the 1.8 in there. So if I'm self-managing, it's looking like at about 8% return, about $24,000. And I kind of looked at some risks and some, I guess I should have said cons and pros, but whatever, risks and pros. They are really high-end student rentals, and if the market goes down or something happens, high-end stuff is usually the first to go. But from my experience so far, it's really been international students wanting a nice place to live in, and they're a bit messy at times, but it just they do like they love living in a place that's nice, and it's over $1 million. For a student rental to be kind of in the 1.3 range at this time, in the St. Catharines, Niagara area, seems a bit risky for sure, but that's kind of why I left it in the risk column. For the pros, it's fully rented out. New leases were signed for May 1st, about last week. Their own bathroom in each bedroom, which is a huge plus for students for sure. I guess another risk would be it'd be hard for me to convert this into like a single family situation, because it's 6 bedrooms, 6 bathrooms. It might be tough. If it was 4 units, I could probably do it. So that's definitely a con as well too. And another one of the pros are like they're oversized rooms. I feel like he could have done 8 bedrooms and 8 bathrooms in each, or like instead of 6 and 6, he could have done 8 and 8. So I think he might have overbuilt a little bit. So the numbers that we've been talking about, he's been looking at it as like, hey, this is 6,000 square feet, $200 a square foot. I'm looking at 1.2 to rebuild plus the land. And I know he built it in 2015, 2016, so he has a bit of a wiggle room in that sense. But of course, he deserves to get paid for holding the property, which is kind of why we're selling the 1.35 range. I think the questions I have for you are, what are some things you would look for, or would you even consider buying a student rental property for over $1 million, first of all, even if the numbers make sense? As you can see at the bottom here, I've been looking at some units. This is a apartment building in Beamsville, 7-unit complex. I've been looking at something in St. Catharines. That's a 6-unit complex, but the numbers are, not making a lot of sense for me. So this is kind of why I'm going back to the student rentals. I think long-term, I would want to buy and hold this property because it's just beautifully built. There's Ethernet ports in each room. There's bathrooms in each room, mini fridges in each room. Like, it's really nice. But I think I would want to use the cash flow from this to slowly purchase, a property that's undervalued that I can fix and flip. I've never done the fix and flip thing, but from watching your videos, I think if I had a bit of cash flow coming in from the properties, I could probably, use that amount of money to, keep investing in property. So I think I would take a little bit more risk if I could get this one. But yeah, I just want to see your thoughts. I know I've been rambling a little bit, but I just want to see what you think.
Yeah, it's all good. So definitely understand your perspective. It's a really hot, competitive market out there right now. And I guess first things first, it's very clear that you're thoroughly going through your due diligence, which I think is really important in these times. The fact that you own multiple student rentals gives me confidence that you know where student mentality is at, right? So it's not the end of the world as we know it, even though we are going through kind of COVID in 2021 again. But it definitely spooks a lot of other potential competitors of yours, right, that might be looking to acquire student rentals. So I think we are seeing a little bit more softness in student rentals than in a lot of other properties because like everything's insanely hot now. For me, the biggest question is just kind of thinking long term, right? Yeah. So how does this fit into the master plan for Sunny? What do you want to have the portfolio look like 3 or 5 years from now? And how easy will it be to truly outsource management? And do you think that you'll still be able to get the same ballpark returns? And so one thing that I'll comment on this, and this is just anecdotal experience, but both myself and Mike Rosehart, who also has had a good number of student rentals, we both experienced that when we truly outsource the property management, especially on our student rentals, we noticed a decline in the rents that we could command, right? So, for example, like if this guy is able to charge $650 or whatever, and that feels premium, my experience, if this was in London, is that I might end up with $575, right? If I was using property management. And that's one thing. But then sometimes what people forget is like property management fee goes up, right? When you outsource, plus your revenue goes down. So I would just run the numbers that way. And then whatever you believe is a reasonable interest rate that you might have to renew at in 3 to 5 years from now, I would also factor that in. And if you still like the way the numbers look with those considerations, I would have very little hesitancy moving forward. If you're like, ooh, I don't know if I like that, then again, I would just try and really look at that big picture. How does this all fit into my long-term plan? One thing I will say is once you start looking at apartment buildings and things of that nature, and then I'll circle back to an idea I've got on this property as well. But when you're looking at apartment buildings and everything of that nature, and I was arguing with a troll in the YouTube comments yesterday about this, but like every single property you buy looks terrible when you first buy it in this market. Like any apartment building or thing like that, because the sellers almost always selling it based upon potential. And so really it then becomes our job to try and find a way to finesse their desire to sell it for the potential and our desire to actually make money off the potential, because oftentimes they're baking in too much of the potential into their pricing, which makes it so that we can't actually win. So one thought here is like, it sounds like your builder, knows what he's doing. He's consistently crushing this shit out. Is there a version where maybe there's a middle of the road and you're able to get some VTB action here, right? Or something else that maybe sweetens it for you. And again, I'm sure he knows what he's doing, but in theory, there could even potentially be some capital gains deferral, depending upon how his shit's structured and all that. And again, we don't necessarily need to get deep into that, but that's where I would start sniffing around it, because that's what we immediately start sniffing around on our apartment buildings, right? The moment we don't really like the pricing. So for example, I just got a message actually today. We just went firm on 2 12-plexes in Chatham. And so the way that went, I didn't actually even know about it till we went firm. So when I first saw the price, I was like, that seems a bit high, guys. Like, are we getting a little too aggressive here? Like, because if I remember correctly, we're acquiring about 1 1/4 a unit. And I really like to be closer to 100 a unit in Chatham. And so like 25% premium's not nothing in my world, right? And so I'm like, what's going on here? But then it turns out that we were actually able to negotiate $600,000 in a second place VTB at 5.5% for 5 years, which is actually pretty cheap money for us. So sometimes when we're able to play with this, that's how, like, whether you're looking at future apartment buildings or you're looking at one of these, that's one of the first things we do to try and juice our returns.
So, I definitely hear you. I've been watching a lot of your videos recently, and I've thought about the VTB side, but then I thought, you know what, if this being my first property, um, and like I talked to the bank, I told them it's a student rental, they're still giving me 1.8%. It's an A lender, so I was like, you know what, it's cheaper for me to pay the full price myself and move forward with it. But you know, he's interested in VTV, but he's looking for like 7 to 11%, kind of in there in that range. Um, and then I thought, you know, having a VTB means that I would have more cash in my pocket to make more deals. But I don't know if I can jump into this market right now and be committed to my job and start making a lot of deals right away. I think I want to really focus in on one property, keep it for a couple years, see what other buildings he's building. I definitely love the apartment building side of things. I definitely see the potential there. But again, it's just you don't know what you don't know, and I'm just trying to learn as much as I can at this point. So I haven't really looked into it. I mean, I looked at a couple apartment buildings but they didn't just really make sense number wise. So my long-term plan, what I was thinking is, you know, the Thorold area, we got burned by a property management company a couple years back, actually. When I stopped managing for my parents and I started working, um, you know, they kind of had to do it. They outsourced and they got burnt. You know, things weren't rented on time. They were overcharged by, you know, a lot. And there was a bit of disputes there. So I kind of came back and started managing the properties for them. What I want to really do, and this is what I started doing when I was at school there at Brock, is doing, you know, using the portfolio that I currently have and adding this to my portfolio and really immersing myself into that market. There are tons of student rentals in that area. I could show you back into like the Winterberry area right here. This whole street and area is all student rentals. They're all semi-detached that people have bought single dwellings and people have rented them out. And a lot of people that I know that are renting in this area don't live in this area. So I would probably want to, you know, leverage my experience with these high-end rentals and probably even start my own property management company out there. Really helping outside investors hone in and get, you know, what I wish I got when we were there, providing that same level of service. And that's probably when I'd probably take a step back from my job and start doing that full time. But when thinking about like the overall picture, I want to be sitting on the beach and chilling out, right, kind of thing. But right now I'm young, I'm 27, and I just want to get my hands dirty for like the next 10 to 15 years, really. So it's a really good question about thinking about the overall and how this fits. I know that this fits my current MO or my family's MO of purchasing these properties and renting them out. But long term, even selling this and flipping into a building would be amazing. But again, that's just if the right deal comes across, for sure.
Mm-hmm. And just one thought, and we don't necessarily have to explore it on this call, but if you want to, I'm happy to as well. And that is just, when you think about student rentals, do you have any concerns with long-term trends? So I definitely, on the surface, don't have concerns on a 3 to 5 year time horizon. I think that the bureaucracies and the fiefdoms that are built up within the post-secondary education system in Canada will move as slow as possible when it comes to adapting innovation. But at the same time, it does feel like innovation's being thrust upon them, even regardless of what they want. So I'm just curious, again, you know, obviously, you know, a little bit of my bias, but where do you think, like 10 years from now, do you have any concerns about student rentals and the level of demand?
I saw your video on that, I believe, recently. I forget who it was with, but I definitely agree with what you're saying. A bit of a difference, though, I would feel like is, you know, these universities are getting used to the profits that they're making by being all virtual. But I've also seen the crazy amount of investment that's been going into Brock. We had a parking lot called Zone B. It was a little further away from the school, and they've torn that down and built a huge stadium. And you can't fill stadiums virtually. So I think they're thinking that, you know, being on site, spending money on campus, and obviously being part of that culture is a big part of how these universities that are not top tier attract students. So I think for the Brock area, for the Niagara region in general, I don't see it happening in the next maybe 5 to 10 years, but I definitely hear your point of more of the learning being online, and that could be maybe more for international students. It could definitely impact student rentals. Like there's no doubt about it. Again, no one knows what's going to happen, but I would say that I feel pretty confident that student rentals will continue. And if not, I'm hoping I can probably get this into a fourplex and rent it out to four families instead. But I agree with you. There's definitely a risk factor there for students, for sure.
Yeah. And I think the biggest point you hit there right at the end is just starting to think about what the pivots potentially could be, right? So what could a plan B or a plan C look like? And again, there's a lot of space in those houses you're looking at buying. So assuming the city's amenable to repurposing the use, like there probably are pivots available for you.
There's another question that I do have, and it's thinking, waiting a couple more months, seeing how there's so many more multi-units available in Toronto all of a sudden in the Etobicoke region, although they're priced like crazy, but these fourplexes, sixplexes, eightplexes that I've been seeing for like the 4 millions, 3 millions, whatever else. But I feel like there might be more properties available to purchase. But on the flip side, I think like the reason why I bring it up is because I'm sure a lot of the viewers feel the same way. Like, oh yeah, maybe I can wait a month, or maybe I can wait 2 months, and I'll time the market. But like you say, it's not timing the market; it's time in the market. So I agree with your earlier point. Actually, when my parents and I, when we bought those properties, spending $600,000 for a triplex in 2013 in Niagara was crazy. We're just like, what the heck are we doing? But looking back at that, it's just like, that made the most sense in the world. So for me, looking for like this checks off a couple boxes for me. One, it's cash flowing at least for a year. I know that for the students that have already signed. The property's beautiful. It's marketable in a COVID-friendly way, having your own bathroom and stuff like that. That I feel like people may lean on more in the coming years here. It cash flows. It's a private deal, but I just need some help on understanding is 1.35, even though that's the number that he wants and I could do that. Should I just go for it, or should I still try and haggle the price a little bit? It's hard for him to justify it based on cap rates when it's like a duplex, really. Like, just other duplexes in the area have not sold for 1.35. They're in the 8 to 9 to million range. Mm-hmm. But there have been buildings and fourplexes, fiveplexes that are 12 bedrooms and more that have sold for like 1.5. So the bank was like, we'll get it appraised and hopefully the appraisal comes right. But I'm just getting more and more, I think I'm just too much in the numbers right now. I'm just analyzing it too much, just because it's my first deal, I'm trying to get every dollar out of it. And I just feel like, a part of this meeting was, from your experience, is it worth it to do that? Is it worth it to just maybe pull the trigger or still get a couple of dollars out of the deal?
Yeah, I'm different than a lot of my peers, I would say. I think that a lot of my peers would tell you to squeeze every dollar out of it. Like, okay. People that have negotiated with me will, like, that really know me. Like, the moment I've got what I need, I just move on. So, like, you can honestly go back and watch episodes of The Pitch. Which we do like every Thursday.
I get on The Pitch eventually.
Yeah, you should definitely come on The Pitch. But if you watch, like, there's only a couple episodes where I've done deals, but like, that's not acting. That is just kind of how I am. So like the moment like I see, like if I'm like, okay, he just offered me 10%, I think he would allow me to say 11, but I'm happy with 10. I'm like, cool, next deal. What else do you got for me? Like, let's go make more money. So that's my mentality. I wasn't always there. So the very first student rental property I bought, we fought tooth and nail over 0.1 of an interest rate, right? Like we literally, like, it was a battle between CIBC and BMO to get our first mortgage because like we were squeezing every percentage out. And I think we ended up with like a 2.35 instead of a 2.55 or a 2.45 or something like that. And it's just like, do I look back now and I'm like, thank God we shaved that penny? Like, no, the answer is absolutely not. I think the bigger thing is really knowing if this is a good fit. So like even last night I lost out on a negotiation for something where I think I knew exactly what I was willing to spend, and that's what it was. So like, I was thinking about it. I'm probably going to give a speech to my team tomorrow about this, but I made the right decision, even though I didn't win. And that's sometimes hard for people to understand, but that's really the way I think about these things.
What do you think about like the 8% return if I self-manage? Do you think that's worth the investment here in today's market?
It's so relative that it's extremely difficult for me to say, because like one person's 8%, another person's, so like what's your perception of hassle? Like for me, the answer would be unequivocally no. Like, you mean that this might ring and I might actually you can't see it because of my green screen thing, but my phone might ring? No, that's completely unacceptable for almost any return to money now at my stage of life. But that's just like where I'm at. There was a time when like, again, oh shit, it's going to be $25 to have a guy come and clean out the garage. I'll just go do it
myself. Yeah.
So like everything's relative. You grow and you experience, and like there's times that I can remember more experienced investors telling me these sort of things, and like me just being like, yeah. And honestly, I think a lot of it you have to go through to a degree. You have to experience yourself. So like, should you just jump into this or should you nickel and dime? I think either way, you'll walk away with a lesson, right? Like if you nickel and dime and lose it, you're going to walk away with a lesson of like, fuck, I really wish I would have got that deal. I'm never going nickel and dime again. Or if you don't and the market softens, then you'll probably learn a different lesson. You'll be like, I always need to nickel and dime, and that was important. I think the bigger thing is knowing what your big picture is, how this fits into it. And then as long as you're comfortable, then just do whatever you prefer. Like some of my friends, they have to get the best deal possible. That's actually more important than making money. And so like they'd rather risk losing the deal and negotiating hard. Where like for me, it's about I'm aggregating a portfolio. So like I don't need to crush it on any individual deal. I just need all the deals to be good.
That's a great point. That's crazy though. I mean, a part of me is like, I want to get this deal for even $5,000 less, just so I could say to myself that I got it for a little bit less. But I agree totally with what you're saying. I think, with watching your videos and hopefully getting more and more involved with Cashflow Tribe, I want to start building a bigger portfolio, or adding on to my previous experience, and then eventually moving on to apartment buildings and stuff. I'm trying to hold on to my job as long as I can and get that cheap mortgage for as much as I can for as long as I can. But yeah, no, this is really insightful. Hopefully your viewers got a little taste of another deal, which is great. I've been watching all your videos, so it was great to see you and to talk through this. I've been thinking about this deal for a long time now, but I think I want to make a call after this and pull the trigger a little bit.
Awesome. Well, best of luck, Sonny. And if people want to follow along with you on your real estate investing journey, can they? And if so, where?
Probably on Matt McKeever's page, because I'm probably going to be on one of your interviews soon.
Okay, there we
No,
go.
I'm kidding. I haven't really considered creating any kind of social media, but once I get into the property management side of things, I probably will. Yeah, I've seen how much it's worked for you.
Yeah, and I'd really encourage you, if you're already a part of Cashflow Tribe or you're thinking about it, like you can join for free, participate in the forums,
I'm in it,
and like people can literally just become a micro influencer in those forums, right? Yeah. And like I know for a lot of people at first, telling the world or your friends and family, in your case, maybe less scary, but like for a lot of people telling their friends and family that they're a real estate investor can actually come with judgment or a lot of doubters or hate. So definitely
I'm definitely worried about this video getting into my friend's hands or someone from work and being like, hey, so you're investing on all these properties. Probably.
There's a balance there. That's for sure.
Yeah. I mean, hey.
Awesome. Well, I appreciate you making the time for this episode, Sonny, and best of luck on this deal, and keep us in the loop. So let us know in the comment section when this video comes out, whether you got it or not.
Will do. Thanks, Matt. Appreciate it.
Thanks.
Bye, brother.
See ya.
What are you saying? Not the time or the place, baby, it's not